This is Pete Moore on Halo Talks NYC. I have the pleasure of coming in from Grapevine, Texas, a CEO who I was fortunate enough to meet in person, and now we can just follow it up with video and audio like it should be. John Merris, Solo Brands, public company, taking over the outdoor space in leaps and bounds. Love to have you as part of the O and the Halo. Welcome to Halo Talks.
Yeah, thanks, Pete. Great to be here.
Awesome. So we first met at the Credit Suisse Halo Investment Summit. You know, you've done a great job of aggregating a number of different brands, ticker symbols, DTC, if anybody needs to know. So talk about how you became the CEO of this business and, you know, what some of your other stepping stones kind of made it apparent to you that, hey, this is a good fit.
Yeah. So, you know, a lot of people mistake me as the founder. I didn't found the business. I joined in fall of 18. So I'm just coming up on my fourth year with Solo. I'm a growth guy, and really kind of the nitty gritty of kind of where my upbringing came through from a career standpoint. Started out as a door-to-door salesman, worked my way up. They graduated me to a cubicle and gave me a phone and said I could actually dial dollars instead of having to knock on doors, and then eventually gave me a couple people to manage and kind of worked my way up through the sales ranks. Eventually became a sales executive, but my background has been all in growth. So I've worked for a variety of industries, all in high growth. Mostly up to Solo was all private equity backed type enterprises. That were, you know, somewhere in the 10, 20 million of revenue, and then growing them up to, you know, 100, 200 million of revenue. And that got me through the time frame by which I met the founders of Solo. They actually sent me a message on LinkedIn. Nice. And said, hey, we heard you're a growth guy. We heard you know how to build sales teams. Could you come in and tell us a little bit about that? They didn't say anything about coming on and being the CEO of Solo or anything like that.
Dude, they hotboxed you, man.
They totally did. So I came in and answered questions for an hour, kind of asked some questions so I could be a good answer of questions for those guys. And I'd never heard of Solo when I came in. It was actually founded and headquartered in my hometown outside of Dallas in Southlake at the time. Oh, wow. And I never heard of it, but I grew up on a 50-acre ranch. You know, made fires as a kid and stuff. And I come in.
You didn't hear about much anyway.
These guys are talking about a smokeless fire pit, and they've made kind of getting outside a really cool fad. And I'm like, man, this is awesome because this is the way I was raised, right? And we got about an hour into the conversation, and the next thing I know, they're asking me, hey, you know, have you ever thought about being a CEO? And that was exactly my aspiration. I really loved all aspects of business, not just the growth side. And you know, fortunately, they saw something in me that invited them to, or incited them to invite me to come over as the CEO. And 9 days later, I came on as the 7th employee. So I was very early on in the Solo Stove story. And then last year, we ended up acquiring a few other outdoor brands. And so Solo Stove still exists, but we created the parent company Solo Brands. And then brought Oru Kayak, Isle Paddleboards, and Chubby's Shorts, the men's apparel business, into the fold. So now we have those 4 brands: Solo Stove, Oru, Isle, and Chubby's.
So, you know, you worked at some pretty well-established software companies. Obviously, that's a recurring revenue stream you're building on, you know, last month's ARR. And then you jump into this as a 7th employee. You know, how much structure, like what are some of the things that you brought to the table that these guys, you know, after a couple hours offered you a job? What do you think? Was it like organization? You know, was it like growth without, you know, hitting a tree? You know, what are some of the things maybe that if I was a fly on the wall would have been like, aha, like this guy's got the experience and can execute? Because sometimes I think people look at somebody's resume and don't really know, did this person really do that at that company or not? Or they were just there for the ride?
So my background wasn't in software. It was more in digital marketing and then in hard goods, a glass board manufacturing business, but still kind of an ARR component in the marketing agency, right? So we had kind of monthly recurring charges coming through for our clients. I think obviously I don't want to speak too much for the founders, but if I go back to our meetings, our early meetings, and then them bring me on, there were really two things that I think attracted me to them. I think the first one was that I had a track record of building teams and managing teams.
Mm-hmm.
And I think Solo had gotten to a point where they recognized that it needed to scale. They didn't have as much interest in growing and managing large amounts of people. And I had done a lot of that. And so I think that was number one. And I think number two is that they were very growth minded, and I had a growth mindset. I wasn't scared of fast growth or big growth. I just always have been very fast paced.
Mm-hmm.
I enjoy that part of it, kind of the organized chaos side of business. Yeah. And I think that they recognized kind of those two things and said, "Hey, let's give this guy a shot."
That's great. So I should know the chronology of this, but I don't. But when you went public, how many brands were under that holding company at the time versus there are now post being public?
Yeah. So we had just completed the final of the 3 transactions last year and then went public. So we finished the Chubby's transaction on September 1st and then went public October 28th. So we had all 4 brands when we went public.
Gotcha. So, obviously running a 7-person entrepreneurial team, in your hometown, obviously you report to investors and you report to a board, you go public, and now it's like, hey, John, every 90 days we're doing a checkup. We might be also doing a colonoscopy. So like, just be prepared. And now like, this is your new normal. So what are some of the pros of going public, and then what, not cons, but what are some of the, compliance related things, the trade-offs? Thank you. The trade-offs.
Yeah, absolutely. So, even in this environment, I've absolutely loved it. I love being under pressure. I love the scrutiny. I've always said, like, I just believe in ultra transparency. I love people being able to look under the covers and see what's going on. Got nothing,
Mm-hmm.
no skeletons in the closet per se. And,
right.
And so that side of it for me has been super invigorating. It's different every day. And because other people are looking at your business with a magnifying glass, it requires you to be sharp, and it requires your team to be sharp. And in that regard, I've absolutely loved it. We're constantly forward thinking about where we're going to be and should be in the next 3 to 5 years, and then going out and executing on the plans to move in that direction. The downside, and you kind of mentioned this actually, so I'm a bit leaning into what you're already sensing that I might talk about here, but there's a psychological element to being a public company that's related to external factors that have nothing to do with the fundamentals of the business or execution. That's just related to the fact that on a daily basis, your stock price is going up and going down just based on, in a lot of days, just stuff that's totally out of your control, right? Unrelated to earnings calls, unrelated to business performance, and totally related to how somebody wakes up that day and decides to trade your stock. And what that creates is a scenario where, not really so much at the executive team level, but sometimes as you work your way through the organization, you have employees that look at it and it freaks them out. Like, oh my gosh, like what do I not know that the market knows about the company? Maybe we're not as good as I thought we were. And so I find myself constantly saying to the team, and I've said this over and over again, I said, listen, the stock price goes up 100%, we're not twice as good. Stock price goes down 50%, we're not half as good, right? The bottom line is we're executing, and this is the same company it was yesterday as it is today. You kind of said that earlier. Yeah. And that's kind of the message with employees. So you're just kind of working through the psychology of it. I tell people all the time, I should have studied psychology and not business as a public company CEO. I think I'd be better off with that skill set. But, I think our team's been resilient, and that's just, one of the nuances or the trade-offs, as we talked about, that comes along with being public.
Yeah. Well, one point I just want to hit on, which you addressed, is, I got short-term, obligations or, guidance and doing the right thing for, the company and the income statement and the earnings per share and EBITDA, I also got, hey, look, I got an R&D that's basically might be fueling my company's majority of the revenue in 2 years. So I'm not going to trade off the future for current. So obviously, again, this is more of like a psychology class, but maybe talk a little bit about your ability or how much time you spend educating people on the business, and that innovation turns into profits. But it's not going to be here in 90 days because I got to go through a natural path of testing this, building it, engineering it, sourcing it, So how do you kind of balance the two, and how much time do you have to use communicating to your investors?
Yeah, that's a good question. I probably spend 25-ish% of my time or so, a quarter of my time, either talking with analysts, talking with investors or potential investors, answering questions, helping them really understand the story. I spend another, 25% of my time. So collectively, probably half my time internally or externally talking about just who we are and what we're doing and what we're executing on.
Right.
The reality is that I'm a big believer, and there's a lot of great CEOs, public company CEOs, especially that have come before me that have done this great. That I'm really just repeating what others have learned. But when you take great care of your customers and you do what's right by your customer, ultimately that generates returns. And when you generate returns, that's doing right by your shareholders. And you do right by your shareholders, and everybody wins, right?
Yeah. Yeah.
And that's really a philosophy that we operate under over here. We're very focused on the customer and taking great care of the customer, and believe that relationship with our customers is ultimately what drives long-term performance for the business. Every investor I talk to, I don't think I've talked to one, whether in practice or not, they do this. I think every investor has told me we invest in the long term.
Oh, yeah. It's all over their website. Flexible capital also, until I don't get paid my interest payments in 90 days. Then I'm not 100%,
right? and until we get into this environment, then all of a sudden the long term view goes out the window, and I got to fire sell everything off. And so the reality is everybody's out there doing what they're doing. But what's really important, and I would say, to the listeners out there that are thinking through, again, this conversation point around pros and cons or trade-offs or whatever of being a public or a private company, is the reality is that there's a lot of emotions, there's a lot of psychology goes into it, not just internally with our employees, but also with investors. And sometimes it doesn't really matter if they believe in your story, if what they're seeing on paper is what the data shows, trading volumes, but things totally unrelated to business performance could impact somebody's willingness or excitement around participating and being a shareholder with your stock. And what we believe is, in the long term, fundamentals will win out, right? So be a great company, deliver good returns in terms of financials, and then eventually, whether it's short term, long term, we talked about it a little bit at the beginning of the call, but we're just coming out of COVID and we're rolling right into some other macro factors. And so it's like, how do you balance all the emotions and the psychological impacts of all of those changes, and just make sure you go deliver as a company?
Yeah. I mean, one of the intriguing things, obviously you run a 4-brand platform now, and, people are assuming that at some point you're going to continue to add, to the tentacles, in other areas. Just thinking through you as a CEO, because there's a lot of entrepreneurs here that say, hey, this is a great idea, let's get on it now. Or, hey, this acquisition book just came in, like, let's put all of our resources into this. And it's a reactive opportunity. It's not strategically like, I need to go buy a fitness accessory brand because XYZ is now going to leverage Dick's or REI or whoever my customer says, hey, I want you to buy this company because they got some cash flow issues, they got some reputation issues. You guys take care of us. Like, I need you to pick up this brand for me, basically. So how do you kind of calibrate? Look, long term, yeah, that might look like a great deal, but like, I've got to focus on the 4 brands I have. I can continue to do what I'm doing. I don't have to disrupt my entire accounting system, my ERP, my sales reps with educating them on another brand. So maybe talk about how you methodically think through growth opportunities. And also, when something hits the transom and you're like, oh, this would be cool to own, how do you kind of pull the emotion back and say, like, that's great in 2025?
Yeah. I think the first thing is that you really have to figure out as a brand, as you think about your 3 to 5 year vision, do you see the growth primarily coming from organic or inorganic growth, right? Inorganics, acquisitions, organics from what you have. And that's critical point number one, right? And it can be both, but it doesn't have to be, right? And even if it is both, very rarely is it exactly 50-50, right?
Yeah.
Like, maybe you feel a little more bullish on organic, not as bullish on inorganic. For us specifically, we're more bullish on the organic opportunity than the inorganic one. However, in this environment, we are not oblivious to the fact that there are going to be some great opportunities for buys in the next 18 to 24 months. At least we believe there will be. We've already seen valuation expectations come down drastically. And so we also are going to be opportunistic, right? We're not going to turn our cheek or our chin up at a great deal for a business that fits well into the portfolio. That being said, like you mentioned, it's really important to know who you are and what you're after. And for us, we are, call it 85% focused on organic growth, but opportunistic enough to leave a door open if the right opportunity came up in acquisition to go and execute. For some businesses, that may be the wrong approach, right? You may be at the end of your cycle from an organic growth standpoint, and your only option for growth is to go acquire. Bless their hearts. We're not in that spot, and so our focus is going to be more on the organic side.
Yeah, so my dad used to run a coffee equipment company. So they made stoves, grills, coffee machines called Cecilware. I ran that for 38 years. He had the cleanest resume of anybody I ever met. He had some brand equity, but not like real brand equity, not like a Keurig machine or BUNN as it was the market leader there. So there was an investor that came to me. We were pitching a deal a couple of months ago. And he's like, you know what? All this company has is a brand. Like, I don't get it. Like, the products are, and I'm like, hold on a second. They created a logo and they have a couple letters in a certain font, and people pay a premium for that. What do you mean they only have a brand? So how do you think about like certain brand building activities and saying, how do I become a steward of 4 brands and maintain? Look, somebody can come to you and say, hey, Chubbies, that should be in these different product lines, like license it out, put it on, whatever you can put it on, and just pimp it out like it's a logo that doesn't matter, right? So how do you internally kind of protect the brands that you buy, and also say, hey, look, great idea, we could make some money on that, but you going down, that's not who we are. I want people to hear from you of the power of the brands, solo brands, right?
Yeah, I mean, I think there's 2 things. I think the first one is that a really, really smart guy that has mentored me a little bit over the last few months told me, culture isn't what's on a piece of paper. Culture is what you live. Culture is what you do. That's real culture. Right. And I totally believe that to be true. And the reality is that I believe that building a great brand centers around culture. What's your culture? Well, at Solo Brands, our culture is the customer. It's taking exceptional care of our customers. I don't believe per se in us going out as a company and building our brand. What I believe in is taking great care of our customers and letting our customers go and build our brand for us.
That's interesting, yeah.
And you look at our referral rate, for instance, for new business. Over 40% of our new business that comes through is from word of mouth. It's from referral, and that to me is the biggest testament to brand building that we could hope for, and that's what we continue to drive for the company as a whole. Is take great care of our customers and let our customers go out and build the brand for us, and really know who you are, versus kind of the stuff you're talking about, which is sticking your logo anywhere and thinking just kind of get it. Be everywhere, because sometimes being everything means you end up becoming nothing, right? You can't be everything to everyone. Yeah. So that's been our focus.
So a follow-up question to that: you've got these brands and you've got all these influencers out there, and NIL money that could be in the collegiate market. You have a lot of interesting ways to play this. You got celebrities that might show up outside, cooking up some burgers, or, what is it called? Turduncan, I think it's like the three meats all in a row. I don't know how that's manufactured. I really hope it's not a real animal. But whatever it is that's cooked on a solo, that's fun. You can do it in the backyard of your own home. Having said that, like, do you think about brand affinity programs with celebrities, with, athletes, and how much would that be a focus of yours, or have you had any bad experiences with like affiliating your brand with an individual?
Most of our brand affiliations happen organically, not intentionally. So we'll have, a celeb, post on their social media, they're sitting around a solo, you
I got
know,
you.
drinking a beer with a friend or you know, playing a guitar and hanging out or whatever it might be. You know, same with Chubby's, you know, we'll see a sighting, you know, an NFL press conference post game, and you know, a player will be wearing a Chubby shirt, you know,
Yeah,
and
that's great.
and we're like, oh man, that's freaking cool, you know. And then you know, generally our approach is to potentially then try to lean into that, right? So we might reach out to that athlete, or we might reach out to that celebrity and say, hey, we saw that you sitting around a solo, or you were wearing a Chubby shirt. You know, we should do something together. And
Gotcha.
so we've done some stuff like that. I wouldn't say that we've had any bad experiences. To us, you know, you either succeed or learn. There is no fail. So the ones that haven't gone great, you know, we learn from them, try to figure out why they didn't go right, and then adjust or adapt. But we do believe that influencers and social commerce is going to continue to be a really, really important avenue or channel for great brands to operate through. And we intend to lean into it. And I think we have a suite of products that are easily shareable on social. They make people want to, you know, post about them. They make people smile. So they're easy products to run through the influencer or affiliate type channels. And you know, we'll continue to lean into that.
Yeah. So in closing here, you know, two questions. One, if you were to talk to your 25-year-old self and say, hey, this is what you're about to embark on, what kind of advice would you have given, you know, the younger Merris?
Gosh, you know, probably just don't be scared of what outsiders are thinking. You know, don't worry about don't make short-sighted decisions because you're worried about what people are thinking that are outside of the organization. You know, just put your game plan together and go execute. You know, time and time again, we've proven out that when we do that and we focus on that, you know, we succeed and we get stuff done. And I think that would be that would probably be the best piece of advice I'd give myself.
Awesome. All right, that's great. Well, I'm glad we met in person. We'll post everything up on the on our site and the feed. We'll have a nice caricature of yourself. You could use it with your equity analyst as a joke if you want, saying this is the real me. You know, we'd love to figure out ways to help get cross promotional products of yours in and around the Health Club channel and the studios, because these are all your demos are
Yeah, that'd be
identical.
awesome.
So
That'd be awesome.
that's
We
great.
just launched the Mesa, the tabletop fire pit, which really expands our TAM into people in more urban settings, even being able to use the product. But it's just a small, kind of our version of the Yeti tumbler, right? For a small mini fire pit, and really cool product that inspires. In fact, our kind of new tagline that we're leaning into at Solo Stove is just get outdoors, period. It doesn't matter, you know. And so we think about Halo and we think about this, you know, health, active lifestyle, outdoor focus. This outdoor side of just how do you facilitate getting people outside? Like just get outside. That product I think really nails it, and it's seen some really early successes that we're excited about. So anyway,
great. All right, we'll pick those up, test it ourselves, and then tell everybody we know. How's that?
Beautiful. Love it, man.
Cool. All right, man. Great catching up with you. Thanks for the words of wisdom. Continued success and staying focused on the big opportunity and you know, the guardrails that we talked about. I think people need to fully understand that, you know, you're running a business, you're also running, you know, assets under management basically at the same time.
Yeah, absolutely. And keep me posted on stuff Halo's doing. You know, we'd love to stay close to you guys and stay involved with the stuff you guys are doing to keep the evangelizing, you know, what Halo is all about.
Awesome. All right, we'll do that. Great to see you, man. Thanks for your time. Take care, buddy.